Many thanks for making a date today. Welcome back. The Bank of Ghana's move to align its forex rates with that of the forex market is hitting the profits of some commercial banks. Joy Business is learning that some of the banks have made this challenge known to the central bank. But does this give credence to the fact that some banks were profiting from challenges facing the Ghana cedi? George Rafi tells us more.
The Bank of Ghana earlier this month announced that it was going to move its official foreign exchange quotes closer to what the market or the commercial banks were offering. This was to avoid a situation where banks were able to profit from this gap. But it appears the regulator wasn't that fast because some banks were indeed profiting from this challenge. Well, is this a big deal after all? Because every bank is in the business of making profit. Well, it is believed that the development was putting some pressure on the Ghana cedi, contributing to its depreciation. We are learning that some of the banks that were heavy in the forex business and were benefiting from this development have had their profit reduced significantly. For some, the development shows that indeed some banks are benefiting from the current challenges facing the Ghana cedi. But what about those who have also argued that when it comes to determination of rates and regulations, we should allow the forces of demand and supply determine the rates in the country?
Let's turn our attention to one of our top stories today. The Union of Industry, Commerce and Finance Workers, UNICOF, is asking the Ghana Revenue Authority, GRA, to immediately rescind its decision to tax clothing allowance of bank staff from 2020. According to UNICOF, the directive has no basis in law, as the issue of taxation was long dealt with when Major Daniel Ablo Kwaku retired, was the commissioner in charge of the Domestic Revenue Department of the GRA. General Secretary of UNICOF, John Senanu Amegashi, who spoke to Joy Business, accused the GRA of double standards. My colleague Norvan Akwaheford has been following up this development and joins me in the studio with more details. So Norvan, can you bring us up to speed with how we got here?
Yeah, Emmanuel, what is interesting is that we found out that in 2011, the GRA made an attempt to actually tax both fuel allowance and that of clothing allowance for bank staff. And these didn't go down well with these people, and so the union that leads the staff went to the GRA through a consultant they had engaged, and that was WTS Nachia and Adebaye. They went in there to meet the GRA and they made a case, and we had the GRA commissioner in charge of the the DTRD, which is the Domestic Revenue Tax Department, which was headed by Major Ablokaku, saying agreeing. And for that matter, they actually, signed and, issued a letter to that effect that, look, you know what, we agree. We think that we don't have to tax both your fuel and, clothing allowance. I actually had an interview with the General Secretary of UNICOF, that is John Senanu Amegashi. Maybe we can listen to him, and after that I can, give you, throw more light on this.
Payment of taxation on clothing allowances. They themselves had rules, among other things, giving us the opportunity, or giving the employers opportunity to pay clothing allowances without deducting taxes. And they stated reasons that the purpose is that the clothing must be used exclusively for the purposes of the work. They themselves had ruled on this matter, and that had given us the opportunity to receive the clothing allowances without it being paid.
Okay, so tell me, when exactly was this ruling done? If you can just read some of the lines in this particular ruling you are referring to, and exactly what did they say? Because they kind of are saying that they have agreed with you as a union, and for that matter, it's a non-issue.
We are very surprised at that. This communication was from Ghana Revenue Authority, dated 7th April 2011. Image or clothing allowance. I quote, "Your appeal was based on the fact that the clothing was to boost the corporate image and business promotion of the company rather than the employee. So the emphasis here is on the company's image and business promotion rather than a benefit to the employee. On the basis of the fact that the employer requires employees to wear the prescribed attire with the risk of being sanctioned should they default, and in view of the importance, the corporate image and business interest of the employer, seem to be linked with the demand, I uphold the appeal to confirm the provisions of Section 8, subsection 1D as a discharger or reimbursement by an employer of an expenditure incurred by that person on behalf of the employer that serves the proper business purposes of the employer. Indeed, my earlier ruling was on the same basis, except that my understanding was that this was a regular monthly payment rather than a one-off payment.
So who signed this particular letter?
This particular letter was signed by Major Daniel S. Ablo Kwaku,
okay,
the former commissioner,
of the GRA.
You understand?
So you had gone to the kind of commission that they set up to appeal when there was an attempt in 2011 to charge this.
You are right. You are right. The union represented the company that presented the appeal. And as the union that organizes the members, we went to the commission and had this ruling. So we are surprised that we have never been engaged before they started engaging Bankers Association. And we also expect that the Association of Bankers must also engage the union, because we have made our point very clear to them that these are allowances that are non-taxable.
Yeah, because
by their own ruling.
Okay,
and they also paid the clothing allowances to their employees without deducting taxes. So where are they now descending on the banks and other companies that are enjoying the same allowances?
Laws in this country in terms of taxation, we need to be able to develop a nation.
We as law-abiding citizens and law-abiding union, we respect every law of this country. But the right thing must be done. You have ruled that we should not pay taxes on the clothing allowance. If for any reasons that you want us to pay, there's a need for us to engage. You cannot bypass acts, find a lean way of engaging the banking association. They don't pay. It is the employers that pay. And these are negotiable items. We have them in our collective agreement. So unilaterally, employers cannot decide to deduct taxes from our clothing allowances without engaging acts.
Well, so that was Johnson Senanu Amegashi, General Secretary of the UNICOV. Now, Norvan, so what exactly is going to happen? I mean, you told me earlier that they're threatening to go to court.
Yeah, in that interview, I mean, it was an extensive one, and he did indicate that if nothing is done, they were going to escalate and go to the highest level to ensure this is done. And I actually asked him that, okay, are you considering going to court if, you are pushed? And he said, why not? Even if we have to go to court, we'll go to court on this matter.
So how much of the percentage on the taxation is GRA demanding?
We were told that GRA is looking to charge 25% on net, that's the total net, which is going to be paid to workers of these banks in terms of their clothing allowance. So which means that if you divide it into 4, they are taking a quarter of it.
So what's the way forward now?
I mean, when it comes to the way forward, they have said that they are willing to engage the GRA. They are writing to them immediately, and then also they're going to talk to the Bankers Association and tell them that, look, we have to understand that the GRA themselves had ruled on this matter in 2011, and if up till now you didn't engage them, you cannot go ahead and ask that workers should pay. In any case, this is clothing allowance. The workers are expected to dress in a particular way. There's a prescribed way of dressing. It's either the bank provides the fashion house where they can go and pick up the clothing, or they give them the money to go and buy these clothing, to ensure that they look in the way and manner they're expected to look.
All right, so we'll certainly come back to you again and as the situation unfolds. Thank you very much. That was Norvan Akwa-Hayford. Away from that, the Securities and Exchange Commission, SEC, has admitted there are some challenges with licensing requirements for fund management companies. According to the Deputy Director General of Finance, Paul Abibiu, some regulatory challenges in the current licensing regime are not up to standard, hence the need for the regulator to amend them to ensure a smooth administration of all fund management firms. He said this at the 3rd Regulatory Forum of the Institute of Chartered Accountants Ghana in Accra.
On 8th November, the Securities and Exchange Commission, SEC, revoked the licenses of 53 fund management companies for not complying with regulatory requirements. At the 3rd Regulatory Forum at the Institute of Chartered Accountants, ICA Ghana, the Deputy Director General of the Securities and Exchange Commission, Paul Abibiu, hinted the Commission will amend its regulatory requirements.
There'll be a few things. One is the qualifications of the people, of the key persons involved. One is to also look at a fit and proper criteria to ensure that people have not been accused of embezzling or have not been heading failed institutions where they are part of the failure. We'll also be looking at situations where one, they have the right resources in terms of capital, not just paper capital, but real liquid capital in the business. We're also differentiating the licensing requirements. So in the past, it was almost like a one-size-fits-all. About 100,000 cedis was the capital requirements. Now we're going to differentiate it. So for fund managers, it'll be about 2 million. For broker dealers, we're looking at about 1 million, and so on and so forth. For exchanges and custodians, it'll be a different level. So there will be a differentiated capital requirement for all the operators in the market. There are some challenges with it, yes. So amending it is critical to ensure that we have the right framework and that we also give people enough time to adjust to the new framework that we'll introduce.
The ICAG's third regulatory forum aimed at bridging the gap between regulators and chartered accountants. The chairman for Professional Standards and Ethics Committee at the ICA, Michael Esiedu, says the engagement will help regulators and chartered accountants to smoothly work hand in hand for a uniform understanding on requirements and directives issued by the regulators.
There was minimal engagement between the regulators when it comes to areas of financial reporting. And the ICA being the regulator of accountancy practice in Ghana and having its members involved in accountancy practice, ICA thought it was important to get the regulators into a meeting where they can share ideas, they can discuss matters that border on financial reporting.
A member of the ICA, KB Anda, said the financial sector regulators need to respond to the concerns of chartered accountants anytime they are called upon. Alberta BC reporting for Joy Business.
The Chartered Institute of Marketing Ghana says it is taking steps to compel political parties to appoint professionals as their communications and marketing officials. George Brafe has been engaging the president of the Chartered Institute of Marketing Ghana and has the rest of the story.
According to the institute, these steps are part of its broad advocacy to help shape marketing of political parties in the country. They believe that political parties should attach some professionalism in the way they do their stuff to ensure that their actions and comments do not negatively affect the economy. Dr. Daniel Kasati is the president of the Chartered Institute of Marketing Ghana.
We want to see elections in Ghana go beyond unnecessary insults, trading of insults between political opponents. We have, in the last week or so, seen the example from Britain. Boris Johnson executed his campaign based on just a three-word slogan: get Brexit done. Simple. He didn't need to attack any opponent. The worst he came to was just to say the other guy would not do it. We can do it, so get Brexit done. This message was so strong that was the message that was able to market this political product called Boris Johnson. So if we bring it back home, we want to see a situation where political parties will stay away from just finding people who speak fine English, and every political party now is running for a lawyer to become their communications experts. We said no, find qualified PR people to run the party. The party's image must be protected by qualified communications people, unemployed marketing people to market your products. What are your products? Your political ideology is a product. Political parties must begin to think, how do we push our ideology? If you are leftist, as in the Nkrumah's group, if you are to the right somehow, as in the Buziais, it is an ideology. If your ideology is Nkrumahism or Buziaism, as it were, it may be. How do you get to market this idea to an 18-year-old?
He's also been talking about the upcoming presidential ball. It comes off tomorrow.
The ball, as you know, this is December, the last month of the year. It gives us the opportunity to take stock, in retrospect, all the things we have been doing for the 12 months of the year. It also gives us the opportunity to look into the future, the coming year. What series of activities are we going to engage in? For the first time, we are breaking this tradition to introduce this advocacy thing. So I talked about the political marketing. What we are also going to touch on tomorrow is to advocate, and next year we'll pursue it vigorously, the possibility of certain minimum service quality standards for regulated industries. You know, the National Communications Authority is doing it for the telcos. So if you fall below a certain minimum, you are sanctioned.
Dr. Kasati also disclosed that the marketing bill, which is currently before Parliament, when passed, could help them better regulate the marketing practice in the country.
Now, Finance Minister in his 2020 budget presentation disclosed that government will raise up to $3 billion in Eurobonds in 2020. Two key issues that came up during the nation's international borrowing is the timing and the cost of which the country will borrow. Michael Kobler is an investment professional and director of Synergy Ghana. He spoke on the business edition of PM Express on JoyNews.
Typically, the election year, the first 6 months is the active period. If you are not able to engage or do anything meaningful within the first 6 months of the election year, you've lost it. So in terms of timing, I mean, the first quarter, early second quarter will be perfect timing. In terms of pricing, it will largely depend on our track record. I mean, you spoke about transparency in the last election. How have we deployed the funds that we borrowed in the last election, the $3 billion? What did we tell investors we were going to use the money for, and what have we used it for? You'll be surprised. I mean, we sit here in this country, but people know, the investors out there know a lot more than we do. And they follow and track these things to the left and to the latter. So you go on a typical roadshow, and I was privileged to be in the first and second roadshow in this country, and they ask you very niggling questions. I mean, very down to the detail, and you'll be surprised. They will expose your nakedness to you. I mean, if you had said anything in your prospectus which is not the truth, you'll be found out. I mean, these guys are very smart investors. They're very shrewd, and they engage different countries. So what I'll say is that all over Africa, elections bring some kinds of uncertainty because of the track record that we have. And we always say we'll stick to fiscal discipline. We don't. We will not overspend. We overblow the budget. Our deficits are high and all that. So investors will generally be wary of these sentiments. And then based on all the issues around the last borrowing and how it has been deployed, investors will take a decision on how to price the bond.
Meanwhile, an economist and head of finance at the University of Ghana Business School, Professor Godfred Bokping, says as the country inches towards the 2020 elections, government must prove it is disciplined enough to abide by the fiscal responsibility law.
I'll call on government and say that, you know what, let's just use next year to prove all of us that, yes, that, you know what, we will not make the mistakes that we have made in the time past. We will maintain fiscal discipline. Because when you read across the international community and even from the domestic market, the fear is whether government will maintain fiscal discipline. Okay. That we will not spend in excess of the projected, we will not do so many off-budget expenditures. And those off-budget expenditures usually do not go to enhance the productive asset of the economy. They are politically motivated. Okay. And then also, so many things we do not explore efficiency. We don't have fiscal space. The little we have, let's make sure that we put the little money in the areas that can generate the most benefits for all of us. Okay.
Now, local rice processor Avnash says the country has the capacity to produce and supply enough local rice, which should outweigh the demand for the commodity on the market. This response comes on the back of Joy Business's checks on the market, which revealed there was limited supply of local rice on the market despite the campaign to consume locally grown rice. Group Head of Industries at Avnash Industries Ghana Limited, Vipul Jain, spoke to Joy Business at the GEPA's President's National Awards for Export Achievement in Accra. Bismarck Awusa has more.
The demand for local rice has surged in the past few weeks following the reports on rice glut in the northern part of Ghana. However, there has been a sustained campaign spearheaded by famous local rice producer Avnash Industries on the need to consume locally produced rice. Meanwhile, Joy Business's checks on the market have revealed that the demand for the local produce far outweighs the supply by the production firms. But in an interview, Group Head of Industries at Avnash Industries Ghana Limited, Vipul Jain, says the new taste and preference is now catching on, hence the need for companies to do more to exceed demand soon.
This self-reliance is not an overnight job. How the change happened, 3 years back we came, the farmers got encouraged by us paying them cash at the farm gate. So gradually we see this improvement coming after 3 years. And it is not the end. People will still go back, productivity will increase, farm yield will increase, the farmers will have more resources. So this is first step to the chain reaction which we are going to see. So I hope in near future, not more than 3 years, we are going to be self-sufficient.
Avnash Industries saw its range of products receive various prestigious awards at the GEPA President's National Awards for Export Achievement for the years 2017 and 2018. Mr. Jain says the company will leverage the awards to increase its market offering so as to contribute to the government's vision of self-reliance.
As everybody knows, we are in news because of rice, but more than rice, we have been exporting, We export to 5 countries from Ghana. We have state-of-the-art plant, and this is very encouraging for us because the volumes are also growing. Victory two-way, the rice is doing well. Country has risen to the dream of rice, self-sufficiency, and the second dream is being an exporter. So I think we are faring very well on both the accounts, exporting for oil, palm oil, vegetable oil, and local rice.
Bismarck Ausa, Joy Business.
And that's all in this edition of The Marketplace. It's been great having you on board this edition and all other editions this week. My name is Emmanuel Boaji. Many thanks for watching and have a great weekend.